Good morning, all traders across the globe. The time is 10:12 a.m. right now on 10/26/2021. This is Jeff Killian for the VTC. We are definitely going to make this video a little shorter due to demand of time constraints within all of you across the map here. You're looking at a 1-minute chart of YM and Dow E-mini futures in your contract month 12/21. The action on this 1-minute chart, where the prices blew off here at the session high, is 35,759. The areas above that for the preferred entry price is going to be plus 2 or 3 at 762. Now above that we have fib levels that we have extrapolated in from a 15-minute chart. Okay, 50% retracement here at 35,772.61, at 35,786, 50 again here, 35,799, and then again here. So when we look at the possibilities of what the upside targets are in unknown territory, we have an opportunity to pick up some known areas versus most traders have no idea where these prices may trade up into in the near future. And you can check me on this throughout the next few days when hopefully we have a chance to see these prices trade up. Again, laying out levels that otherwise most traders are not aware of at this point. So this is a 50% retracement of the 61.80 down to the session high, where the distance is so great, we'll use the 15 between these two as a target. The news that came out at 10 is pretty much inconsequential. The prices have not reacted either way. The end of day updated in real-time analysis on ES and both YM were that the market handed off the short-term money, falling off to the long-term money, now kicking in for this session, indicating the possibility that the prices might trade up. Here's the fib level extension that I use personally to create these upside targets that the majority of traders at any level have no idea that exist. And we have used these levels previously very profitably. So if the market trades up, the first possible entry is to the session high here with the target here and here. And again, here. So we have 1, 2, 3 possible legs to the downside of prices trade down. We're not doing anything until we get to the previous session's high right here in this incremental sandy brown color for the best possible short at 35667, with a hard target right down to the previous session's close of the up close for superior downside resistance to tap out at 35637. Second leg, possibly 35623. I'm going to cut the tape and possibly even end it until we get some price movement that is favorable to demonstrate again the follow through on what the levels that we have created are as compared to where the price action will move up and until later today. Time, check me, 10:15 a.m. Eastern Standard. Okay, we paused the video for a minute here. We're back at 10:16 and some change. What I want to make note of, in the overnight session, there was a lot of program trading going on, previously throughout the overnight session here. This was the best move so far, the up move and then the subsequent down. A lot of guys on our camp got this move to the downside here because of all the negative divergences that indicated, that the market should turn back around. So there was a move that lasted maybe 9-10 minutes that was extremely profitable. And now as we get into the open equity session at 9:30 in 1 nanosecond, nothing but program trading here that we don't want anything to do with. Now we're starting to get out of it. And to get out of it, we have to get up and into with still extended and continued price chart pattern uniformity in order to consider going long with statement volume coming in. Right now, the short orders are still in. Order flow says that the smart money is still net neutral after the shorts took place this morning through all this program trading. So at this juncture, we need to see statement volume coming in again for this long. Okay, we're back at 10:20 some change. We have a test through the preferred entry price, which is again, through the session high test for the market to get into brand new blue skies. Order flow came in strong on buys, institutional buying, as indicated by the histogram right here, up and through, testing now a different level as well. The accumulation here definitely confirmed this is smart money trading in. Back-coded orders here, smart money's in, and this move is either going to follow through or it's going to be a shakeout to the upside for the market to turn back around. At this particular second, it appears that the market can trade through. Our proprietary indicators across the board say yes. Let's give it a little time here to see how much volume comes in again and again consistently in order to make this happen. We're just about there for a long trade. Order flow is still strong to the upside. Not quite yet. Now, a lot of traders are in above here, this level, above the session high right now, but we are not. And for good reason. We're waiting for the additional confirmation of the additional smart money volume to come in, to stamp out, to make a statement, to say that that's it, we're going to follow through. And right now that hasn't happened. So essentially, we have stayed away from a bad trade. Let me pause the video for a second again. Still toying now at 10:23 a.m. Toying with the session high. Remember, their job as the market makers, as the largest institutions, is at this particular juncture strictly manipulation, getting up and into and trading through previous market all-time highs into new blue skies territory is some of the most difficult trading that any trader could ever attempt to do, even at the highest levels. So it'll really test your skill level. In this particular moment, we can see that the price have tapped out, shaken out that previous session high and getting to new blue skies, a number of times. So at this time, all bets are off up until serious new accumulation comes in. Order flow here, after we moved up sharply, is now back down. As you can see, confirmed right here, now back down. So we're going to want to get through this level right here again, a previous stamp on the actual smart money tap out here to get through that in order to consider trading long again. This level readjusted. I think we're going to let this serve, because of time constraints, as how to identify a potential market move into new blue skies that most traders would have taken. But you can learn here through the techniques that we teach that I have just demonstrated in this real-time scenario, a trade to stay away from. The key to longevity in trading as a professional is risk mitigation. It is not the winning home run trades that a lot of traders are thinking that they can bank on. So it's not necessarily learning what to trade, it's learning what to stay the hell away from to preserve your risk capital and your emotional capital. This is Jeff Killian for the BTC. The time is 10:25 a.m. Eastern. Be careful out there, everyone. Today, we are at near brand new blue skies on the market.